Well, hi guys, welcome to this Money Control live stream. It's a brand new week and lots of cues to digest this morning as well. Of course, on Friday we saw a roller coaster ride. In fact, all of last week was a roller coaster ride for the market, with the volatility index, mind you, surging 40% in the last 7 sessions. So yes, it has been a volatile ride, but this morning GIFT Nifty is hinting at a triple-digit rebound on the Nifty. So we will be watching out for a positive open, and of course we'll have to see whether or not the bulls have an upper hand this week or not. I'm Nandita Khemka, and I'll be taking you through all the cues for trade and all the stocks that will be making headlines in today's session. Also, just a reminder, if you have any stock-related queries, keep them coming in on our YouTube feed. We'll try and take them up with a technical expert on the show. But of course, before we move any further, let's take a look at the top headlines at this hour. S&P 500 clocks its best gain since February as a softer than expected April jobs report, amid renewed bets of a rate cut by the US Fed. Asian markets too open higher. However, Japanese and South Korean markets remain closed for trade this morning. The GIFT Nifty indicates a triple-digit rebound after a 170-point cut on Friday. Berkshire Hathaway's operating profit surges 39%, while Warren Buffett's cash hoard swells to a record high. In the first AGM without Charlie Munger, Warren Buffett lays down his succession plan, adds India has untapped, unattended opportunities. Crude clocks its steepest weekly loss in 3 months after softer than expected April US jobs report. Brent is hovering at levels of around $83 a barrel, while gold prices trade steady at $2,300 per ounce. Kotak Mahindra Bank reports the best deposit growth in 22 quarters and sees the highest net interest margin expansion among large banks in the fourth quarter. The lender says RBI order will impact FY25 growth by 350 to 500 crore rupees. Meanwhile, Britannia sees a soft quarter, but volume growth beats estimates and tightens EBITDA margin and profit miss estimates amid higher competitive intensity. Well, let's take a look at the cues for trade then. If you look at the Nifty, it shut shop at that 22,475 mark, below that 22,500 mark, down 170 points or thereabouts. Of course, as I mentioned, it was a volatile ride last week. The India VIX closed up 8.5% at 14.62 levels. It's approaching that 15 level. So, that's the kind of volatility that we are witnessing at highs. The Nifty Bank Index as well, ended lower by about 300 points in Friday's session. And if you look at the May series, the Nifty open interest was down 5.4%. It shed nearly 6 lakh shares, while the Nifty May futures was trading at a premium of 99.35 vis-a-vis a premium of 120 point in the previous session. Nifty Bank, the open interest was down 8.7%. It shed somewhere around 1 lakh shares or thereabouts. PCR, that was below that one level, so 0.89 vis-a-vis 1.28 in the previous session. Looking at the stocks that will be in F&O ban today, new in ban will be GMR Airports and Balrampur Chini. And, AB Fashion, Aditya Birla Fashion, Biocon and Vodafone India will continue, Vodafone Idea, I beg your pardon, will continue to be in the F&O ban. FIIs remain net sellers, but we are seeing buying support come in, by the domestic investors as well. But without any delay, let me get on board our technical expert for today. Joining me is Kush Bohra, who is the founder of kushbohra.com. Well, great to have you on the show, Kush. As always, given the kind of volatility we have seen, in Friday's session, in fact, all of last week, we did hit a fresh high. Then we, saw the worst drop in 2 months. That's the kind of volatility we saw on Friday. But we managed to defend that 20 DMA mark. So today, given the fact that Qs are positive, would you expect the Nifty to, retest levels of 22,500 or thereabouts?
Hi Nandita, first of a very good morning to you and to all the viewers. Always a pleasure to be here. Well, just last week on our advisory, we came out with a report titled 2 steps forward and one step back. That's exactly how the markets have been behaving, right? The supports are in place. If you see, 22,200, 22,300 is a very strong support base. I would say, in fact, 22,500 will also continue to act as a strong base even on Friday. We inched lower, but then we closed very close to that mark, just below that. So I think the supports are in place. But this is a market that is giving you an opportunity to time and again buy the dip, but also go ahead and sell, and book profits at the higher level. If, however, you've missed out on the second part, which is booking profits at the higher level, then perhaps, this is a bit of a pain. So I think this strategy is working beautifully in the market for the last 15 odd sessions, where you buy the dip, but you also make sure that you're selling, at higher levels. Now, if you see the Nifty and the Bank Nifty, both we are seeing a very clear, very strong negative RSI divergence, which is suggesting that the upside for the market, in the near term, could very well be capped. So 22,800 to 23,000. I know we've not crossed, either of those marks, but I think that's a zone that that could act as a resistance band, and 50,000 for the Bank Nifty could continue to act as a resistance band. So until these levels are taken out, I think the market will continue to consolidate, but we will continue to get these dips. So buy the dip, but more importantly, make sure that you keep booking profits along the way.
All right, buy the dip, but don't forget to keep booking profits as well in this market. But since you mentioned the Nifty bank index, let's talk about some of the banks that came under selling pressure on Friday. HDFC Bank was one of the top contributors to Nifty on the downside. So your thoughts on how HDFC Bank is expected to behave today, and Kotak Mahindra Bank, among its larger peers, the margin expansion has been best for Kotak Bank if you compare it with the likes of HDFC Bank, ICICI Bank, Axis Bank and the likes. Profit growth has also been good. Of course, we've seen some setbacks in terms of RBI's digital ban as well as the top level exit. At lower levels, do you think it warrants a buy? Because we have seen quite a few brokerages as well upgrading the stock post its fourth quarter performance, and the management has also outlined the kind of profit impact it will be witnessing in the coming fiscal as a result of RBI ban.
So let's start with HDFC Bank first, since that's the first one you asked. Now, if you see very clearly, what's happened is that the 200-day moving average is starting to act as a very stiff resistance. So I presume that for the near term, the 1550 level, the 20-day, the 200-day moving average rather will continue to act as a resistance. And investors should be wary of this level. At least the traders should be. If you're an investor, we still maintain the 1700, 750 kind of targets for a 9 to 12 month kind of a time frame. So HDFC Bank continues to remain a buy for us even now. Kotak Mahindra Bank, it just had a lot of not so good news coming for it. I think today's the result action is perhaps a much needed shot in the arm, and the risk reward ratio had become extremely attractive. But I would still be a little watchful. Opening at the resistance zone, apart from the numbers right now, there isn't much going for the bank. So I think I'll just play the wait and watch card on Kotak Mahindra Bank.
Right, we've had the market open in the positive zone as was being expected, but it's a fairly tempered start. Vis-a-vis expectations of a triple-digit up move. We are seeing a 50-point kind of an up move on the Nifty, holding on above that 22,500 mark. The Sensex has also reclaimed that 74,000 mark, 200 points uptick coming in there. Mid and small caps moving in tandem with the markets. 0.2% higher for the Nifty mid cap index and the Nifty small cap index as well, mirroring sentiment across the market. Bank Nifty 49,000, this level has been reclaimed. In fact, it did cross that resistance level of 49,010 briefly. We'll have to see whether or not this uptick really sustains or not. But let's pull up the Nifty FMCG pack and see how that's behaving. We have had numbers from the likes of Titan, DMart over the weekend. So let's see what the Nifty FMCG pack is doing. Of course, in the positive, 0.2% higher for that one. Let's talk about the metal index as well. Let's see how that is doing. I think in Friday's session, metals was among the top sectoral. In fact, it was the sector that saw the least amount of loss. So 0.4% higher for the Nifty metal index. Realty pack, let's see how that's doing. The realty pack has been performing well, but we have seen bouts of profit taking as well in terms of realty stocks. So 0.7% higher for the realty index. Advance decline ratio firmly in favor of advances at the current juncture. We'll have to see whether or not the texture remains the same as we progress throughout the day. But on that note, let's take a look at some of the movers and shakers in today's session. I want to pull up in Kotak Mahindra Bank and see how it's reacting to its numbers, given the fact that we have had a few brokerages also upgrading the stock. So among the top Nifty gainers, after a spate of bad news, it's good to see the stock trading higher by about 3.5%. Britannia as well, on the back of good volume growth in the quarter gone by, 6%. That was the higher end of expectations, and reacting to that, almost 4% higher for Britannia. Some of the tech names are also seeing some bit of buying at lower levels. So IT, that was among the biggest underperformers last week. Some of the names have bounced back, the likes of TCS, That stock is up 1%. You have JSW Steel, Maruti, Eicher Motors, some of the steel names, Tata Steel, Ultratech Cement. You have Tata Consumer also doing well. What's not doing well? Of course, Titan. That stock is down 4%. Numbers have not been all that great. Profit margins have been below estimates. SBI is another one that's under pressure. The company reports its numbers this week. Adani Ports, Power Grid. Power Grid, by the way, had a good run in Friday's session. Today has come under a fair bit of profit booking. Bajaj Auto, Grasim, Cipla, Bajaj Finserv are some of the losers in today's session. Looking at the market open, Titan, Kush, this stock is under pressure. Of course, numbers haven't been all that great. Margins have been below estimates, single digit, so to say 9.9%. That's the kind of margin performance that Titan has handed in. But here, after the numbers, how would you be trading into a Titan?
I'd wait and watch. I wouldn't really be too excited, about the dip that's come about. Anyway, the stock has been under pressure since the start of the year. In fact, somewhere end of January, early Feb is when the stock made a high, and ever since then it's been under pressure. I think with the kind of numbers that have come around, the 200-day moving average is also taken out, which suggests that the near term could perhaps be a bit challenging for the stock. The immediate support level that I'm watching for, however, is 33.25. If that level is taken out, things could get a little worse. But I think, in the current fall, 33.25 is a level that the stock could approach and perhaps take a support there as well. Even despite the, kind of fall that we are seeing, it's still some way away from the oversold territory. So I think some selling pressure could be on before you see some kind of a even a short covering bounce on Titan. So 33.25 is the next level that I'm watching for as a support zone for Titan.
All right, that's a support zone for Titan. But what about Britannia? Crunchy gains this morning, 4.5% uptick. Of course, volume growth has topped estimates, and that's what's providing support to the stock prices. Of course, in terms of profit and revenues, it has been a fairly soft quarter for Britannia. But among the FMCG stocks, Britannia, how is that looking on the charts?
Well, up until this news came about and the numbers came about, I think the stock was perhaps behaving exactly in line with what the peers have been doing. Now, with this shot in the arm, 49.50, 5,000 is the resistance zone. If you see the high for the stock is also fairly close to that mark. So I think most of the gains that were to be had on this, on the account of this news are perhaps done. You might see some profit booking coming in because the stock has been under the pressure for a while. So any opportunity within that 4,900 to 5,000 zone for traders who bought it recently will be lapped up. So I think there will be some selling pressure continuing, profit booking rather continuing on Britannia. A couple of stocks we like in this space. One of them is Tata Consumer, the other is Godrej Consumer, perhaps even a Colgate Palmolive. But other than that, a lot of these names are yet to make any kind of a meaningful bottom and start the recovery. Britannia perhaps could change the tide in the favor, but right now it just seems to be in that profit booking mode.
All right, that's the view on Britannia. But hold that thought, Kush. We'll come back and talk about more stocks, and we'll get our viewer queries as well addressed by you. But let me also bring on board Sandeep Bagla, who's the CEO of Trust Mutual Fund. Great to have you on the show, Sandeep. We have been witnessing extreme volatility at highs, right? As I was mentioning at the start of the show, in Friday's session itself, we saw the Nifty hit a fresh high and then take a dramatic U-turn and clock its worst drop in almost 2 months, in intraday trade. But would you attribute this volatility to election jitters? Or would you say that once that 4th June event is out of the way, that's when we'll see a decisive trend emerging?
See, markets are a little nervous because at higher levels, a lot of follow-up buying might not be really happening. And globally also, if you look at the geopolitical situation, the interest rate policies, the central banks and the US economy, which is the mother market of all economies, there are uncertainties. Geopolitical risks are rising. We have had a dream run for the last 7-8 years. So fair to say that some of the best case scenarios have already been priced in. And globally, we don't know whether good news is good news, bad news is good news. So if the US economy weakens, while there will be expectations that interest rate policy will be a little milder and there will be rate cuts, but one must understand that this is not going to be a start of a big rate cut cycle. There could be minor rate adjustments. There are liquidity is at an all-time high. The financial conditions index are very good. Equity markets are doing very well. So there is no reason for the central banks to cut aggressively and overheat the markets. And when the fiscal policy is loose, monetary conditions have to be slightly somewhat tighter than what they should be. So all in all, I think there are too many factors which the market has to figure and negotiate. And hence a little amount of caution in profit booking is not completely out of order.
Right. If you look at how the Indian markets have fared vis-a-vis their global peers, we have seen some bit of underperformance right in our markets, especially if you talk about China. Over the last 8 to 10 sessions, we've seen Chinese market do very well. We already know that foreign investors have been net sellers, right? We haven't seen big buying coming in from FIIs. But do you think Chinese markets could be one threat when it comes to FII flows?
See, I would not put too much weight to FII flows because the domestic flows more than compensate those flows now. I think if you have to look at a slightly longer perspective, if you leave out the last 8-10 sessions, over a medium-term perspective, India has performed well. And these things tend to normalize over a longer period of time. So I don't see that China market doing well or Japan market doing well is a great threat. See, we are right now going through a phase of very easy liquidity globally. As per what I saw last, the US balance sheet, the US Fed balance sheet was more than $7.5 trillion. And the combined G4 balance sheet is about $21 trillion. All that money is sloshing around the global system. And wherever there is a hint of growth, there is mild optimism. Money will move there and try to, price it to perfection, such that the performance in the near term will look good. So this is a play, I think, on global liquidity, a rising risk appetite, and some amount of, money chasing returns. So there will be phases when money will go to China. There will be phases when money will go to India. Whatever is undervalued, money will tend to flow there. So I don't see that as a major medium-term threat to Indian markets.
And what about the broader end of the markets? We saw some bit of correction after the SEBI diktat, but would you say that much of the froth has already cleared, or would you say that some bit of correction is still due?
First of all, I don't think there was a SEBI diktat. It was just an observation which was quite balanced, and only the negative part the market caught on. I see there is definitely froth in terms of valuation. Stocks have gone up 4-5 times in few months. So one cannot deny that the best case scenarios have already been built in. So we'll have market, I think, will wait for some amount of performance to catch up. And I think there could be some amount of time correction, if not a price correction.
All right. Let's then talk about sectors then. IT, for one. Of course, we've seen the numbers from the big tech companies, right? All of them largely missed estimates. And last week, of course, this was the sector that was the biggest underperformer. But do you expect the underperformance to continue? And if yes, would you advise investors to rotate out of the sector now?
See, IT is a large sector. Okay, it's a large employer in India as well. And when I went to some of the management institutions, I realized that IT companies are not really hiring at the same speed at which they were hiring, a year back or 2 years back. So this tells us something that they are not themselves very optimistic about the demand projections. And if the US economy slows, there is no real reason for one to get over bullish on IT sector. So obviously you cannot change the allocations beyond a point. But one needs to be a little less optimistic and buy at dips, I would say, in the IT sector with a long-term perspective.
But is there reason for bullishness when it comes to private banks? Because, we've seen some margin surprises from some of the top lenders. Even though, Kotak had to go through a spate of bad news, the numbers have been pretty good, and the management has also outlined the kind of profit impact it will see arising out of the RBI action. Would you call this as a big winner of the fourth quarter earnings season, the entire private banking lot, and how should one really go about playing this particular space?
We must understand that the private banks are perhaps the most efficient in terms of marketing financial products. There is tight liquidity in the system, which might compress margins over a period. However, low inflation should help with that. I see some amount of regulatory supervision in terms of the risks that are building up in the system. I feel quite concerned about the build-up in the unsecured loans in the banking system as a whole. And I do see that some amount of restrictions could come to temper the speed at which the loans have been growing. And I think one should be a little cautious in terms of private banks as well. More in terms of what capital restrictions could be coming in the future rather than their efficiency. So I see a good run could continue, but one must keep in mind that the speed at which the retail loans have been growing is concerning, and to regulators as well.
What about the PSU lot? Last time we spoke, you mentioned that PSUs should be looked upon as a marathon and not a sprint. Of course, we have seen quite a bit of a marathon play out when it comes to PSU names. But power stocks, of course, continue to power ahead. But if you look at the defense name, they've kind of slowed down a bit. I'm just talking about the last 1 month performance. So where are you finding value after, last time we spoke, it was 2-3 months ago. Has your view changed, and where are you really seeing value in the PSU basket?
I would say that markets have learned that PSUs, the elephants can dance, and the opportunities aplomb in the markets. So I think PSUs are turning around. I think the perception about PSUs are changing. So I think they are by and large a buy on dips. And depending on the sectoral outlook, I think one should add on every dip.
Last couple of questions, really, Sandeep. Two-wheelers, have had a good April. In fact, in terms of their sales data. From an investment standpoint, would you look at two-wheelers vis-a-vis four-wheelers now? Do you think the runway for growth is higher when it comes to two-wheelers now?
Yeah, I would think so, because monsoons are going to be good. They are predicted to be good. So I think also, I have traveled across the breadth and width of the country when we were marketing our FlexiCap fund. And I see that the conditions on the roads have really improved, and there's a lot of growth in the so-called tier 2, tier 3 cities. I think the two-wheeler segment should be a relatively better bet going forward.
Lastly, of course, we are seeing sector rotation in the market, and there is, a sentiment of risk aversion as well as we battle, geopolitical tensions. And of course, there's this June 4th event that we are waiting for. Which are the pockets that offer safety at current levels? How would you advise investors, or what would you advise investors to do right now if they are looking for sector rotation? Which sectors should they nibble into?
I'm so sorry to say that, but there is no safety in equity markets. I'm so sorry. One has to increase their staying power and invest for the long term. If one really looking for safety, I think fixed income is a great idea. I'm sorry, I've been a fixed income manager for some time in the past, but objectively speaking, I think fixed income provides a very good return at this point of time if one is looking for safety. You have inflation expectations of 4.5%, and you are getting 250, 300 basis points higher than that on fixed income products, which are getting you 7.5 to 8% on the AAA variety. So I think if one is looking for safety, then fixed income is better. If one is looking for growth with a medium-term perspective, then equity remains the king.
All right, that's the view then. Of course, Sandeep, with that, I'm afraid we are running out of time. It was great catching up with you as always. Look forward to having a longer conversation with you sometime soon. Thanks a lot for sharing your thoughts with us.
Bye-bye. Have a great day.
Well, then let's go back to Kush, who's been waiting by patiently. Kush, before I start taking up queries with our queries that are being sent by viewers this morning, want to know your thoughts on two stocks that had divergent moves in Friday's session. One was Coforge, reacted to the earnings and the latest acquisition that they are making, and of course the lack of guidance. We saw that stock tank over 10%. On the other hand, you had Chola Finance, right? That stock reacted sharply to its earnings, 10% higher for that in Friday's session. How would you trade into these two counters?
Well, fairly clear, trades on both of them. Coforge is an avoid or a short, and as far as Chola Fin goes, here you can take long positions. The stock is now consolidating, with a positive bias, despite the kind of up move. The stock's not seen any kind of profit booking. However, you did see some profit booking from the higher levels. If you see the key level for the stock very much held on to those, those being 1280 to 1300 support zone. So for Chola Fin, I think any kind of dip, maybe closer to those levels could also be an interesting a buy. But from here on, also someone wants to accumulate, not a bad idea. Just to revisit Coforge quickly, the stock's in deep oversold territory, so there could be some sort of a rebound from there. But once we get that kind of a jump, I think there is a very good possibility that the stock could perhaps continue sliding further down, or maybe consolidate with a slight negative bias. So Coforge is a sell on rise, and Chola Finance is a buy.
All right, Coforge is a sell on rise and Chola Finance is a buy. With that, let's take a look at the queries that we're getting this morning. Of course, the first one comes in from Debu K. Wants to know your thoughts on a Raymond. It has had a good run so far this year. We've seen a 25% up move. Today's session, some bit of downtick, 2% lower. Would you advise investors to buy into these dips? Do you think it's a good level to average?
Well, I think not average per se, but the stock is very clearly, a buy on dips. Now we've had a very sharp run up, in the last week or so, and now what we're seeing is just a round of profit booking. So if someone's got an existing position, I would say, perhaps wait a little. You don't want to allocate too much capital right now. But yes, if someone's looking for a fresh entry, this level or perhaps somewhere closer to 2150 is also a good level to enter. So Raymond, for sure, the structure is positive. We've had a breakout and we're seeing, just a profit booking, of that breakout. But other than that, on the whole, very constructive on Raymond. Positionally, I think the stock has the potential to go to 2450 levels also. And a strong support comes in at 2050 level.
Strong support at 2050. Of course, Kush is fairly bullish and constructive on a Raymond. Hope that answers your query. The next query is coming in from Anand on a Sula. He wants to know whether it's a good time to buy at current prices. Of course, the stock has been in consolidation phase. Last 1 month hasn't done much, just 1% down. But would you advise looking into this?
Well, it depends on the time horizon. If it's, as you rightly said, the stock really hasn't done much. But what's also adding to the fact that you should perhaps not look at it from a trading perspective is the fact that the volumes have been thinning off late. Now, if your view is anywhere from 6 to 12 months, perhaps you could consider buying, because there was a fall and the stock took support at the 200-day moving average and 200-day moving average, and is now consolidating with a mild positive bias. So from a 6 to 12 month kind of a horizon, I think the stock has the potential to hit 600 and slightly higher levels. But from a trading perspective, I think this is one stock that will perhaps continue to test your patience.
Okay, that's the view on a Sula. Hope that answers your query. We have a query coming in from Yagnesh on L&T. Now, this company will be reporting its numbers this week. Stock has been stuck in a downtrend, so to say. 9% downtick in the last 1 month. Even if you look at the YTD charts, it has given negative returns. How should one play it ahead of earnings? Your trading perspective, and with an investment standpoint, how should one look at this?
So, see, from a trading standpoint, the stock had a support at that 3500 mark, very close to that. In fact, just broken below that today. So, I think you should perhaps wait and watch. Also, just as a matter of strategy, what we generally suggest is one should avoid trading stocks, at least on the basis of results, especially on the day of the result. It's not, a trade that you should consider, given that the result is this weak and there is a fair bit of volatility. Perhaps you could give it a miss, because, there are plenty of other stocks in the sea to consider, buying from, let's say, long perspective. Now, Larsen L&T has broken below the support zone, so near-term pressures could continue. There is a support zone coming in at 34.10, 34.15, so round it off to 3400 mark. Perhaps, if the results continue, if the results rather disappoint, then there could be a slip around those levels. From an investment perspective, however, I think the story is a little different. The stocks had a stellar run last year, and this year it's just, consolidating, with a mild negative bias. But I think if you're looking at it from an investment perspective, this is the time to add. Also, I was listening to the gentleman before you, and he said, there isn't really a safety in equity. Very well put. But speaking relatively, this is one stock that perhaps could give you some sort of safety compared to the other more volatile names.
All right, that's the view on L&T. I hope that answers your query. But SBI, one of the top contributors on the losing end on the Nifty today, 2.5% down. Of course, we are waiting numbers from SBI as well this week, and we have a query as well coming in from Naveen. He wants to know whether he can look at SBI for a fresh entry now. Stock has been doing well, Kush, last 1 month, YTD charts, 26% up move, on a year-to-date basis. But should one use this dip that we are seeing now as a buying opportunity?
SBI is a buy on dips kind of a stock. Should you buy it right now? One, as I said, because of the results being around the corner, you should perhaps wait and watch. Also, the fall that we are seeing, or the fall rather that we saw, or rather the dip that we saw on Friday and the fall that we're seeing today, I don't think this is really the end of it. The stock could perhaps hit, slide a little lower. A 790 is where I would consider, getting into SBI. So that's the level that I'll watch for. I don't see a turnaround quickly, and by that I mean just today, on the stock, unless the results surprise on the positive side. So wait for this dip to halt. Perhaps 790 is a level where this might halt. If you see signs of the stock, the stock halting at around 790 levels and attempting a rebound, perhaps that's a better point to enter, and also the risk reward ratio from there on will be extremely favorable.
All right, that's the view on when to buy an SBI. Of course, it is a buy on dip. I can see a query on Coforge from Athil on our feed. Of course, Coforge, Kush has already shared his views on this stock. It's a sell on rise for Coforge. I would request you to go back in the feed and see Kush's full answer on this particular stock. But the next stock query that I want to take up is on a BHEL. It has been a multi-bagger stock. Last 1 year, it has almost tripled, and even if you see the last 6 month charts, the stock has doubled. Monica Pandey wants to know your thoughts on BHEL. Do you think one should wait for correction?
Well, for a fresh entry, yes, but you have an existing position, then hold this, with a trailing stop loss of 275, assuming that you have it from, a much lower levels, and hold it with a trailing stop loss. We are starting to see some sort of negative divergence on the weekly setup, for BHEL. So that is not to say that the stock will not run higher from these levels. The kind of setup that the stock has and the run-up that it has seen has every potential to go to 325 levels in the coming months. It's just that the negative RSI divergence suggests that there could be some near-term pressure. We're starting to see that today. So I would wait and watch 275 again, a make or break level for this. If it breaks that, then perhaps it could slide further to perhaps even 250. So while this is on our radar, also has been a recommendation also sometime back in our advisory service. But we'll continue to wait and watch. If it does hold that 275 mark, then perhaps the turnaround from here on could take the stock to 325.
All right, that's the view then. 325 crucial level to watch out for on BHEL on the upside. But just few more queries that we can squeeze in this morning. Satya CK wants to know your thoughts on whether to buy a DCB or a City Union Bank, and he has a time horizon of 1 to 2 years. Your preference?
Between the two, yeah. I think City Union Bank is perhaps that I will have on my radar. The stock's completing a rounding, bottom formation, attempting a breakout. So 160 is a very crucial level. If you see Friday also, the stock ran past below that, but closed, just around that level. Today we are seeing some pressure. A significant close, above the 160 level could push the stock higher. And, we're looking at levels at 172 and then perhaps even a 180 on the stock from, a medium-term perspective. So between the two, I think City Union Bank, would take my pick. Very strong stop loss comes in at 150, which is also just about the 200 the moving average for the stock.
All right, just about time for one more query then. Ravindra Sunkari wants to know your thoughts on L&T Tech. Any levels you'll be watching out for here?
That'll be the LTTS stock, right?
That's correct.
Yeah. Again, very sharp downturn. Volumes are thinning, so that could mean that the end of the fall perhaps is a little near. That is what the data is suggesting. Slightly preemptive, but the level that I'll watch for on this one is 44.75. That's a support zone. If it does halt from there, then a short covering round from there on could take the stock higher to 46.50, 4700 levels also. So 44.75 is the level to watch for on the downside.
All right, 44.75, the level to watch out for on the downside. Hope that answers your query. But, I want to also ask you your thoughts on a Tata Tech. It's a recent listing, of course. We saw a lot of interest and a lot of, euphoria around the listing, so to say. 1300, 1400 kind of levels we saw on the stock. But now it has come down to 1000 levels. And numbers have, kind of been subdued. Any level that you'll be watching out for here, and do you think this can be utilized to buy into this?
Too early. One, let me also confirm that there is a very limited data on this, but given whatever data we have, it's not very encouraging. If I draw a trend line from the listing day up until now, the stock's been resisting just about at the downward sloping trend line. So the recent low of 1020 is the level to watch for. From whatever data we have, nothing to suggest that the bottom is in place and the stock could perhaps make a move higher from here on. So for me, this is on the wait and watch list. If you have an existing position, you could keep a stop loss just below the 1020 level, perhaps around the 1000 mark. If that breaks, then perhaps the stock could continue to linger on lower for some time.
All right, that's the view, of course, limited data, but then thanks a lot for sharing your thoughts on this, even despite the fact that you don't have much data to look at. But, one more stock query that has come in from Sukruta, and she wants to know your thoughts on Vodafone Idea. I think we have been discussing this stock for quite some time, but post the FPO, have your views changed on this stock?
Well, not really. This stock has been on our avoid list for some time, continues to remain so. I know there's been a lot of positive commentary around it, but the stock's not really taken off. It's not really gone anywhere. I would rather be the one to miss out on the first move rather than catch this and be on the wrong side of it. I know, as would have happened time and again with investors, I'm assuming. So I will wait and watch. For me, the crucial level to watch is 16. I know it's a little on the higher side, but that's where perhaps a lot of selling that buying rather that had happened in the stock gets exhausted. The supply pressure gets done and dusted. So I would wait and watch. I'm not very keen on buying into a Vodafone Idea from a trading perspective or even an investment perspective for that matter. I will wait for the price confirmation to come in and then perhaps take a call. So Vodafone Idea for now for me is a wait and watch at best and avoid if I'm being completely honest. As I said, there are a lot of other good options in the market. Why not focus on them?
Well, then that's the view on a Vodafone Idea, and with that we've come to the end of the query segment. But Kush, before I let you go, looking at the texture of the market right now, what are your top recommendations and any F&O strategy that you would be looking at for the day?
So a couple of calls, Nandita. Jindal saw this stock had a very sharp up move, on Friday. Right now we're seeing it, under a bit of a pressure. The opening was positive. Perhaps, a round of profit booking has come in. Still on our buy list, 595, 615 is, are the target. 555, is the stop loss that, we've recommended. McDowell's or United Spirits, this stock too was in the green for the most part of the, opening that we've had so far. Again, a round of profit booking along with the markets, but on the whole, the trend seems upwards. So 1235, 1260 are our near-term targets. 1190 is where I would place my stop loss. Now, as far as a strategy goes, I will perhaps wait and watch a little. I will be inclined to buy a call option on the bank Nifty, but I think I'll just wait and watch for let's say another 30 minutes to see how the markets pan out before making that trade. But I think the index is a good way to play the options segment right now, at least on the long side.
All right, as we speak, Kush, India VIX, that's up another 14%. It has crossed at 16 levels as well. So quite a lot of volatility. In fact, the Nifty has also given up most of its gains. In fact, now trading in the red below that 22,500 mark. So looks like we are in for a choppy ride this week as well. But Kush, with that, thanks a lot for taking out time and joining in, and of course sharing your thoughts on so many stocks with us, and of course also answering our viewer queries so patiently. Always appreciate chatting with you.
Always a pleasure, Nandita. Have a great day.
Thank you and wish you the same. But of course, we have one big IPO opening up for subscription today. Indegene, it's a Carlyle-backed company, and it is raising somewhere around 1840 crore rupees. And the offer is basically a combination of fresh issue as well as an offer for sale of 2.39 or 2.4 crore shares worth 1,082 crores. The price band has been fixed between 430 to 450 rupees per share, and the company plans to utilize the funds raised via fresh issue for debt repayment, capital expenditure needs, as well as general corporate purposes. Of course, one lot is equal to 33 shares, so investors can apply for shares, 33 shares and multiples thereafter. And the tentative listing date is May 13. In fact, in a conversation with the management, they had pointed out that post this fundraise or post this IPO, they will be a zero debt company. Of course, whether you should be subscribing to this particular issue or not, log on to moneycontrol.com and see what experts have to say about whether it's a subscribe or avoid. Well, as I was mentioning, markets have given up all of their gains. Nifty in the red below that 22,500 mark. The mid-cap index is down 0.7% now, and the Nifty PSU Bank Index, that's the big laggard today, near 3.5% cut coming in there. You have SBI, that's among the big losers on the index, 2.5% down for that one. Titan is the other one, cracked over 5%. Coal India, Adani Ports, Bajaj Auto, these are some of the heavyweights that are dragging the index lower. Titan, Adani Enterprises, Adani Ports, SBI and Reliance Industries, these are some of the top contributors on the Nifty on the downside. But what's providing support on the Sensex is HDFC Bank, ICICI Bank and some of the IT names like Infosys and TCS. Well, with that, we are completely timed out on this edition of Opening Bell. Of course, thanks a lot for taking out time and tuning in this morning. Hope you have a great day, and let's see how the markets turn out in the second half of the session. I'll be joining you with closing bell at 3:30 p.m. So don't forget to tune in for that.